Let's get ready for the Ohio real estate exam with 100 questions on state-specific laws, principles, practice, and more. And don't miss what's happening in the bottom corner. It'll be key to your prep. We'll tell you how in a minute. Now let's get started.
Ohio real estate law and practice. Fair housing laws in Ohio. What federal legislation specifically prohibits discrimination in the sale, rental, and financing of dwellings based on race, color, religion, sex, or national origin? Is it A, the Civil Rights Act of 1964, B, the Fair Housing Act, C, the Equal Credit Opportunity Act, or D, the Ohio Housing Rights Act? The answer is B, the Fair Housing Act. The Fair Housing Act of 1968 is a federal law in the United States that prohibits discrimination in housing based on race, color, religion, sex, or national origin, and was later amended to include discrimination based on disability and family status. Which Ohio state agency is responsible for enforcing fair housing laws in Ohio? Is it A, Ohio Department of Real Estate, B, Ohio Civil Rights Commission, C, Ohio Fair Housing Authority, or D, Ohio Property Management Commission? The answer is B, Ohio Civil Rights Commission. The Ohio Civil Rights Commission is empowered to enforce state laws prohibiting discrimination in housing, ensuring compliance with both state and federal statutes, such as the Fair Housing Act.
Have you noticed the code in the bottom corner? Next time you're stumped, take that code to birdsey.ai for immediate help and a free study session with Birdsey, your personal AI study partner. Plus, you'll get access to hundreds of additional questions, helping you move closer to passing your exam with confidence. The next time you're feeling unsure or stuck, give it a try.
In Ohio, what additional protections are provided under state fair housing laws that may not be covered by federal law? Is it A, marital status, B, military service, C, gender identity, or D, educational status? The answer is A, marital status. Ohio's fair housing laws extend beyond federal protections by including additional categories such as marital status and emphasize enforcement of these state-specific protections through the Ohio Civil Rights Commission. Which of the following actions is considered a violation of the Fair Housing Act in Ohio? Is it A, refusing to rent to a person because of their job, B, charging different fees based on race, C, evicting a tenant for non-payment of rent, or D, offering different lease terms based on property type? The answer is B, charging different fees based on race. Charging different fees or offering different terms based on race directly violates the Fair Housing Act, which seeks to eliminate racial discrimination in housing practices across the United States. What action should an individual take if they believe they have experienced housing discrimination in Ohio? Is it A, contact the Ohio Division of Real Estate, B, file a complaint with the U.S. Department of Housing and Urban Development, C, file a complaint with their local police department, or D, seek resolution through a homeowners association? The answer is B, file a complaint with the U.S. Department of Housing and Urban Development. Individuals suspecting housing discrimination should file a complaint with HUD or the Ohio Civil Rights Commission, which are responsible for investigating such claims under federal and state law. What is a specific illegal practice under Ohio's fair housing laws? Is it A, renting a room to a person of a specific national origin, B, deciding not to sell a property based on the applicant's financial status, C, refusing to modify a rental unit for a person with a disability, or D, charging a higher rent based on a tenant's employment status? The answer is C, refusing to modify a rental unit for a person with a disability. Ohio fair housing laws require landlords to make reasonable accommodations for people with disabilities. Refusing such modifications constitutes discrimination and a violation under both state and federal laws. Under Ohio fair housing laws, which case might be considered discriminatory steering? Is it A, providing a variety of property lists to all clients? B, recommending neighborhoods based on school quality without considering racial composition? C, directing minority clients only to neighborhoods predominantly of their same race? Or D, discussing property values with all potential buyers openly? The answer is C, directing minority clients only to neighborhoods predominantly of their same race. Steering occurs when agents guide clients to areas based on race or other protected characteristics. This practice is illegal under both federal and Ohio fair housing laws due to its discriminatory nature. Real estate contracts in Ohio. What is required for a real estate contract to be enforceable in Ohio? Is it A, only the buyer's signature? B, inclusions of parties' identities and property description? C, a verbal agreement is sufficient? Or D, witnesses to the signing? The answer is B, inclusions of parties' identities and property description. For a real estate contract to be enforceable in Ohio, it must include the parties' identities, property description, and be signed by both parties to meet the requirements of the statute of frauds. Who can prepare a real estate contract in Ohio? Is it A, real estate agents? B, licensed attorneys? C, mortgage brokers? Or D, homeowners? The answer is B, licensed attorneys. In Ohio, only licensed attorneys can draft real estate contracts due to their complexity, but homeowners may draft contracts themselves and should consult legal professionals to ensure compliance with state laws. What is an earnest money deposit in the context of Ohio real estate contracts? Is it A, a fee for the listing agent? B, a payment made by the buyer to show commitment to purchasing? C, a tip given to the mortgage broker? Or D, the final mortgage payment? The answer is B, a payment made by the buyer to show commitment to purchasing. An earnest money deposit is a payment made by the buyer as a show of good faith when entering a contract to purchase real estate, as per Ohio contract law.
If you're finding this helpful, please take a minute to like this video and subscribe to our channel for more practice exams, useful tips, and complimentary study sessions with Birdsey.
What happens if a buyer defaults on a real estate contract in Ohio? Is it A, the seller must refund the earnest money? B, the buyer might lose their earnest money? C, the contract automatically extends? Or D, both parties must renegotiate the contract? The answer is B, the buyer might lose their earnest money. If a buyer defaults on a contract in Ohio, the seller often retains the earnest money as liquidated damages, as stipulated in most contracts, unless otherwise agreed upon by both parties. How is a contract amendment handled in Ohio real estate transactions? Is it A, any party can unilaterally amend the contract? B, amendments must be agreed upon and signed by all parties? C, the broker automatically approves all amendments? Or D, verbal agreements suffice for amendments? The answer is B, amendments must be agreed upon and signed by all parties. In Ohio, any amendments to a real estate contract must be written and signed by all involved parties, ensuring everyone's agreement to the new terms. Which of the following is true regarding as-is clauses in Ohio real estate contracts? Is it A, as-is clauses eliminate the seller's need to disclose known defects? B, as-is clauses relieve buyers from conducting property inspections? C, as-is clauses limit the seller's liability for property defects? Or D, as-is clauses void any existing home warranties? The answer is C, as-is clauses limit the seller's liability for property defects. As-is clauses in Ohio contracts limit seller liability regarding unknown defects but require full disclosure of known issues. Buyers should conduct thorough inspections to identify potential defects. What remedy is generally available for breach of a real estate contract in Ohio? Is it A, specific performance, B, breach of trust, C, equitable relief, or D, settlement statement? The answer is A, specific performance. Specific performance is an equitable remedy where a court orders the breaching party to fulfill their contractual duties, frequently used in real estate due to the unique nature of real property. Disclosures required by Ohio law. Which document is a seller in Ohio required to provide to a buyer under Ohio real estate law? Is it A, seller's property disclosure form, B, HUD-1 settlement statement, C, lead-based paint disclosure, or D, environmental impact report? The answer is A, seller's property disclosure form. The seller's property disclosure form is an Ohio statutory requirement to inform buyers of the property's condition. It helps ensure transparent transactions by disclosing facts unknown to the buyer. In Ohio, when must the residential property disclosure form be delivered to the prospective buyer? Is it A, within 3 days of signing the purchase contract, B, prior to the signing of the purchase contract, C, at the time of closing, or D, after the inspection period? The answer is B, prior to the signing of the purchase contract. Ohio law requires that the residential property disclosure form be provided to the buyer before signing the purchase contract to ensure that all known property issues are disclosed up front. What must a seller disclose regarding water supply before signing the property contract in Ohio? Is it A, type and condition of the water supply, B, names of all previous owners, C, zoning restrictions for the property, or D, septic tank capacity? The answer is A, type and condition of the water supply. Under Ohio law, sellers must disclose the type and condition of the property's water supply, as it significantly affects the property's functionality and value to the buyer. Which party is typically responsible for completing the residential property disclosure form in Ohio? Is it A, the real estate agent, B, the buyer, C, the seller, or D, the lender? The answer is C, the seller. The seller, being the owner and most knowledgeable about the property, completes the residential property disclosure form detailing all known property issues as required by Ohio law. Which situation requires disclosure under Ohio real estate law related specifically to environmental hazards? Is it A, presence of asbestos in the ceilings, B, previous pest infestations, C, outstanding home warranty claims, or D, age of the household appliances? The answer is A, presence of asbestos in the ceilings. Ohio law requires sellers to disclose known environmental hazards like the presence of asbestos, as they can present health risks and impact property valuation for the buyer. What information is an Ohio seller required to disclose about previous termite infestations? Is it A, exact dates of infestations, B, existence of past infestations and treatment, C, names of pest control services used, or D, cost of termite treatment? The answer is B, existence of past infestations and treatment. Ohio law requires sellers to disclose any known termite infestations and actions taken to treat them. Detailed specifics like exact dates are not mandated, but transparency is essential for potential buyers. Under Ohio law, what must a seller disclose about material defects in the property? Is it A, only defects fixed within 6 months, B, all known material defects, C, cosmetic imperfections, or D, defects reported only by previous owners? The answer is B, all known material defects. Ohio's residential property disclosure form requires sellers to disclose all known material defects, which are issues affecting the safety, operation, or value of the property. Transfer of title in Ohio. Which of the following types of deeds offers the greatest protection to the buyer in Ohio? Is it A, quitclaim deed, B, warranty deed, C, bargain and sale deed, or D, special warranty deed? The answer is B, warranty deed. A warranty deed provides the most comprehensive protection as it includes covenants of seisin against encumbrances, further assurance, and a warranty forever, offering legal protection against defects in title. What is the primary purpose of a deed in Ohio real estate transactions? Is it A, to create a mortgage lien, B, to transfer title from seller to buyer, C, to establish property boundaries, or D, to provide property insurance? The answer is B, to transfer title from seller to buyer. In Ohio real estate, a deed is the legal document used to transfer ownership of property from one party to another, thereby providing evidence of that transfer. What is required for a deed to be legally valid in Ohio? Is it A, a habendum clause, B, signature of grantor and delivery, C, acknowledgement by a notary, or D, endorsement by a title company? The answer is B, signature of grantor and delivery. A legally valid deed in Ohio must be signed by the grantor and delivered to the grantee. These elements ensure the grantor's intent to transfer ownership is clear and binding. In Ohio, what is the effect of failing to record a deed in public records? Is it A, results in automatic nullification of the deed, B, leaves grantee vulnerable to subsequent bona fide purchasers, C, denies grantee any rights to the property, or D, makes deed invalid for tax purposes? The answer is B, leaves grantee vulnerable to subsequent bona fide purchasers. While a deed is valid between the grantor and grantee, even if unrecorded, failure to record results in vulnerability to claims by subsequent bona fide purchasers without notice of the unrecorded deed. Which term describes the original owner who transfers title by a deed in Ohio? Is it A, B, lessor, C, grantor, or D, testator? The answer is C, grantor. In real estate transactions, the original owner transferring title via deed is called the grantor. This term differentiates the giver of the property from the receiver, known as the grantee. In Ohio, which instrument is commonly used to initiate the transfer of real property ownership? Is it A, deed, B, contract for sale, C, title search, or D, lien? The answer is A, deed. In Ohio, ownership of real property is transferred via a deed, which must meet certain legal criteria to be valid. An official ownership change occurs at deed delivery and acceptance. Who typically holds the responsibility for ensuring that the title is free of defects during a real estate transaction in Ohio? Is it A, buyer, B, seller, C, real estate agent, or D, lender? The answer is A, buyer. In Ohio, the buyer typically assumes responsibility for ensuring a clear title, often by hiring a title company to conduct a search and issue title insurance.
Notice the code in the corner? When you're stumped by a question, enter it at birdsey.ai for immediate help. Enjoy complimentary study sessions and access to hundreds of additional questions to help you pass your exam with confidence.
Earnest money and escrow in Ohio. In Ohio, who is typically responsible for holding the earnest money deposit for a real estate transaction? Is it A, the buyer, B, the seller, C, the real estate brokerage, or D, the mortgage lender? The answer is C, the real estate brokerage. In Ohio, earnest money is typically held by the real estate brokerage in their trust account, as regulated by Ohio Revised Code, to prevent misuse and ensure proper dispersal. Under Ohio law, what is required if there is a dispute over the earnest money deposit after the contract is terminated? Is it A, the money is immediately refunded to the buyer? B, the broker may hold the deposit until mutual agreement or a court order decides the outcome? C, the money is distributed to the seller by default? Or D, the Ohio Real Estate Commission makes an immediate decision? The answer is B. The broker may hold the deposit until mutual agreement or a court order decides the outcome. Ohio law requires the broker to hold the earnest money in case of disputes until a mutual agreement is reached or a court decision dictates the distribution. Which of the following must a real estate brokerage in Ohio have for managing escrow accounts? Is it A, a separate account with weekly audits? B, a designated trust account for holding client funds? C, an open line of credit for emergencies? Or D, a single account for both personal and client funds? The answer is B, a designated trust account for holding client funds. Ohio regulations stipulate that real estate brokerages must hold client funds in a designated trust account to keep them separate from business or personal funds. What happens to earnest money if a real estate transaction in Ohio fails to close due to the buyer's fault? Is it A, it is automatically refunded to the buyer? B, it is returned to the seller as damages? C, it is held indefinitely in the escrow account? Or D, the Ohio Real Estate Commission decides on its distribution? The answer is B, it is returned to the seller as damages. When a transaction fails to close due to a buyer's fault, Ohio law usually allows the seller to keep the earnest money, serving as liquidated damages for the breach. How often must real estate brokerages in Ohio reconcile their trust accounts? Is it A, weekly? B, monthly? C, quarterly? Or D, annually? The answer is B, monthly. Ohio law mandates that brokerages reconcile their trust accounts monthly, ensuring that all funds are properly accounted for and discrepancies are promptly addressed. In Ohio, how must earnest money deposits be handled if not deposited immediately by a real estate broker? Is it A, returned to the buyer unless otherwise directed by written instructions? B, deposited into a trust account within a reasonable time after offer acceptance? C, deposited into the broker's personal account? Or D, held by the seller until closing? The answer is B, deposited into a trust account within a reasonable time after offer acceptance. Ohio law requires that earnest money be deposited into a broker's trust account within a reasonable time frame after a real estate offer is accepted. This ensures proper handling and protection of the funds. What is required under Ohio law if earnest money needs to be returned to the buyer? Is it A, the seller must provide written approval? B, a mutual release must be signed by both parties? C, the brokerage decides the return on its own? Or D, the earnest money is automatically forfeited? The answer is B, a mutual release must be signed by both parties. In Ohio, a mutual release signed by both the buyer and the seller is required to return the earnest money to the buyer, as it confirms both parties' consent to the resolution. Ohio real estate taxes. What is the purpose of the Ohio real property tax rollback? Is it A, to increase the value of properties? B, to reduce property taxes for eligible homeowners? C, to simplify the tax calculation process? Or D, to fund local government projects? The answer is B, to reduce property taxes for eligible homeowners. The Ohio Real Property Tax Rollback is a state initiative that reduces the amount of property taxes billed to eligible homeowners, specifically designed to lessen the financial burden. It does not affect property value assessments. What is the main factor that determines the amount of real estate taxes owed on a property in Ohio? Is it A, the age of the property, B, the property's assessed value, C, the owner's occupation, or D, the construction materials used? The answer is B, the property's assessed value. Real estate taxes in Ohio are primarily calculated based on the assessed value of the property. This value is determined during periodic assessments conducted by local authorities, ensuring taxes reflect current market conditions. In Ohio, how often are property tax assessments typically conducted? Is it A, annually, B, every 3 years, C, every 6 years, or D, every 10 years? The answer is C, every 6 years. In Ohio, property tax assessments are typically conducted every 6 years, with a triennial update occurring midway to ensure property values reflect any significant market changes. Which entity oversees the administration of property tax laws in Ohio? Is it A, the Ohio Real Estate Commission, B, the County Auditor's Office, C, the Ohio Department of Taxation, or D, the Ohio Board of Realtors? The answer is B, the County Auditor's Office. County auditors in Ohio handle the administration of property tax laws, ensuring accurate assessments and tax calculations following state guidelines provided by the Ohio Department of Taxation. What is the homestead exemption in Ohio real estate taxation? Is it A, a discount on property insurance premiums, B, a benefit that reduces property taxes for senior citizens and disabled homeowners, C, a mandatory reduction in property tax rates for all homeowners, or D, a federal program that funds local housing initiatives? The answer is B, a benefit that reduces property taxes for senior citizens and disabled homeowners. The homestead exemption in Ohio provides a tax break for qualifying senior citizens and disabled homeowners by reducing their home's taxable value, thereby decreasing their property tax liability. Which law provides a reduction in property tax for senior citizens and disabled homeowners in Ohio? Is it A, Senior Exemption Act, B, Homestead Exemption, C, Property Value Reduction Act, or D, Ohio Tax Credit Program? The answer is B, Homestead Exemption. The homestead exemption in Ohio provides tax reductions to qualified homeowners who are seniors or disabled, easing their property tax burden. How frequently are real estate taxes typically billed in Ohio? Is it A, annually, B, biannually, C, quarterly, or D, monthly? The answer is B, biannually. Ohio bills real estate taxes biannually, meaning property owners receive 2 bills per calendar year, splitting the annual tax rate. Ohio real estate licensing and regulation. What is the minimum age requirement to apply for a real estate sales associate license in Ohio? Is it A, 18 years old, B, 19 years old, C, 20 years old, or D, 21 years old? The answer is A, 18 years old. In Ohio, the minimum age requirement for a real estate sales associate license is 18. This aligns with the Ohio Division of Real Estate and Professional Licensing regulations. Which body is responsible for issuing real estate licenses in Ohio? Is it A, Ohio Real Estate Commission, B, Ohio Board of Realtors, C, Ohio Division of Real Estate and Professional Licensing, or D, Ohio Department of Licensing? The answer is C, Ohio Division of Real Estate and Professional Licensing. The Ohio Division of Real Estate and Professional Licensing is responsible for licensing real estate professionals, overseeing educational requirements and the disciplinary issues. How many hours of post-licensing education must new real estate salespersons complete in Ohio? Is it A, 10 hours, B, 20 hours, C, 30 hours, Or D, 40 hours? The answer is B, 20 hours. After obtaining a real estate license, Ohio requires new salespersons to complete 20 hours of post-licensing education within 12 months as part of the continuous professional development mandate. What is the penalty for conducting real estate activities without a license in Ohio? Is it A, a fine of up to $1,000, B, a Class D misdemeanor charge, C, a Class C misdemeanor charge, or D, a fine of up to $5,000 and/or imprisonment up to 1 year? The answer is D, a fine of up to $5,000 and/or imprisonment up to 1 year. Engaging in real estate activities without a license in Ohio can result in fines up to $5,000 and/or imprisonment of up to 1 year, as enforced by the Ohio Division of Real Estate and Professional Licensing. What is the primary requirement for a salesperson to receive an active real estate license in Ohio? Is it A, complete 90 hours of pre-licensing education, B, pass the Ohio Broker pre-licensing course, C, hold a college degree in business, or D, register with the Ohio Division of Financial Institutions? The answer is A, complete 90 hours of pre-licensing education. Ohio law mandates that potential sales agents complete 90 hours of pre-licensing education approved by the Ohio Division of Real Estate and Professional Licensing before they can be licensed. What is the minimum passing score required for the Ohio Real Estate Licensing exam? Is it A, 75%, B, 70%, C, 80%, or D, 65%? The answer is A, 75%. In Ohio, candidates must achieve a minimum score of 75% on the real estate licensing exam to pass. This ensures that licensees have adequate knowledge of state-specific real estate laws and practices. Which type of real estate license applications require sponsorship by an Ohio licensed broker? Is it A, broker, B, salesperson, C, home inspector, or D, appraiser? The answer is B, salesperson. In Ohio, individuals applying for a salesperson license must be sponsored by a licensed broker. This sponsorship confirms the broker's willingness to supervise the applicant's professional activities.
Don't forget to comment below with your tips, challenges, and thoughts on exam preparation. Your experiences can make a big difference for others.
Ohio Division of Real Estate and Professional Licensing, ODRE. Which of the following is a primary function of the Ohio Division of Real Estate and Professional Licensing, ODRE? Is it A, issuing real estate licenses, B, regulating home inspection services, C, enforcing municipal zoning laws, or D, providing real estate loans? The answer is A, issuing real estate licenses. The ODRE's core functions include licensing real estate professionals and enforcing the related statutes and regulations in Ohio. This ensures state standards are consistently met. What action can the Ohio Division of Real Estate and Professional Licensing take against a licensed real estate agent who violates ethical standards? Is it A, revoke the agent's license, B, impose federal fines, C, incarcerate the agent for violations, or D, negotiate commission rates? The answer is A, revoke the agent's license. ODRE has the authority to enforce compliance with ethical standards and can revoke or suspend licenses for unethical conduct, ensuring integrity in the Ohio real estate market. Under which circumstances might the Ohio Division of Real Estate and Professional Licensing conduct a disciplinary hearing? Is it A, if a complaint is filed against a licensed realtor, B, during routine license renewal, C, when a realtor applies for license reinstatement, or D, when a realtor changes brokerage firms? The answer is A, if a complaint is filed against a licensed realtor, The ODRE conducts disciplinary hearings when complaints or evidence suggest a breach of regulations or professional standards to determine the necessary disciplinary action. Which type of continuing education is required by the ODRE to maintain a real estate license in Ohio? Is it A, ethics training, B, software skills development, C, foreign language proficiency, or D, local government meetings? The answer is A, ethics training. ODRE mandates specific continuing education, including ethics training, to ensure that licensed agents uphold the professional standards and ethical practices required within Ohio's real estate industry. What is the role of ODRE concerning dispute mediation between realtors and consumers? Is it A, facilitating mediation processes, B, investigating complaints for disciplinary action, C, setting mandatory mediation rules, or D, providing legal representation? The answer is B, investigating complaints for disciplinary action. ODRE's primary responsibility in disputes is to investigate and assess if there are grounds for disciplinary actions rather than providing mediation or facilitating legal services. Ohio real estate finance. Loan fundamentals. Which of the following defines a conventional loan in Ohio real estate? Is it A, a loan insured by the Federal Housing Administration, FHA, B, a loan that requires private mortgage insurance, PMI, for down payments less than 20%, C, a loan not insured or guaranteed by any government entity, or D, a loan that is guaranteed by the Department of Veterans Affairs, VA? The answer is C, a loan not insured or guaranteed by any government entity. Conventional loans are not insured or guaranteed by any government agency. They are typically offered by private lenders and can have stricter qualification standards. What is the main purpose of the Truth in Lending Act, TILA, in real estate finance? Is it A, to set interest rates for real estate loans, B, to require disclosure of clear and accurate credit terms, C, to regulate real estate commissions, or D, to provide tax incentives for home buyers? The answer is B, to require disclosure of clear and accurate credit terms. The Truth in Lending Act, TILA, requires lenders to provide borrowers with clear and accurate information about credit terms to promote transparency and protect consumers in the financial marketplace. What does a loan-to-value, LTV ratio, represent in real estate financing? Is it A, the current value of the property minus the owed mortgage balance, B, the ratio of a loan amount to the appraised value or purchase price, C, the interest rate compared to market rates, or D, a comparison of rental income versus finance charges? The answer is B, the ratio of a loan amount to the appraised value or purchase price. The loan-to-value LTV ratio assesses the lending risk by comparing the loan amount with the appraised property value or purchase price. Lower LTV ratios typically indicate lower risk. What type of mortgage usually involves the highest interest rate due to no down payment being required? Is it A, fixed-rate mortgage, B, adjustable rate mortgage, ARM, C, jumbo mortgage, or D, subprime mortgage? The answer is D, subprime mortgage. Subprime mortgages are offered to borrowers with poor credit history and often feature high interest rates or unfavorable terms due to the lender's increased risk. Which entity typically initiates the foreclosure process if a borrower defaults on a mortgage? Is it A, the real estate agent, B, the mortgage lender, C, the homeowners association, HOA, or D, the local government? The answer is B, the mortgage lender. The foreclosure process is typically initiated by the mortgage lender when a borrower fails to meet the terms of the mortgage, specifically regarding repayment. What is a key characteristic of an adjustable rate mortgage ARM in Ohio real estate? Is it A, fixed interest rate for the life of the loan. B. Interest rate adjusted only once throughout the loan term. C. Interest rate changes based on an index. Or D. Fixed monthly payments regardless of interest rate changes. The answer is C. Interest rate changes based on an index. An adjustable rate mortgage, ARM, has an interest rate that can rise or fall based on a benchmark index. This feature can affect monthly payments and the total interest paid over the loan's life. What is the purpose of a promissory note in real estate financing? Is it A, to transfer property ownership, B, to outline the terms of a loan agreement, C, to issue a foreclosure notice, or D, to determine property value? The answer is B, to outline the terms of a loan agreement. A promissory note serves as a legal evidence of a borrower's commitment to repay a loan under specified terms. This document outlines details such as the loan amount, interest rate, and repayment obligations. Loan type. What is a primary advantage of obtaining an FHA loan for a first-time homebuyer? Is it A, flexible credit requirements, B, lower private mortgage insurance, C, zero down payment, or D, reduced closing costs? The answer is A, flexible credit requirements. FHA loans are backed by the Federal Housing Administration and are designed to make housing accessible, particularly for first-time buyers, by offering lower credit score requirements and a small down payment. Which type of loan is specifically available to qualified veterans and service members? Is it A, Veterans Affairs VA loan, B, Federal Housing Administration FHA loan, C, conventional loan, or D, U.S. Department of Agriculture USDA loan? The answer is A, Veterans Affairs VA loan. VA loans, guaranteed by the Department of Veterans Affairs, provide veterans with favorable terms, including no down payment and no private mortgage insurance, PMI. How do conventional loans typically differ from FHA loans regarding down payments? Is it A, higher down payments, B, lower down payments, C, no down payment, or D, equal down payments? The answer is A, higher down payments. Conventional loans, not insured by the government, often need higher down payments, usually at least 5%, whereas FHA loans can be secured with as little as 3.5% down. What is a key benefit of a VA loan? Is it A, no private mortgage insurance, B, guaranteed approval, C, unlimited loan amount, or D, lower interest rates than any other loans? The answer is A, no private mortgage insurance. VA loans benefit eligible veterans by eliminating the requirement for private mortgage insurance, which is usually a condition of low or no down payment loans. Which type of loan is typically targeted at low and moderate income households purchasing properties in eligible rural areas? Is it A, U.S. Department of Agriculture USDA loan, B, Federal Housing Administration FHA loan, C, Veterans Affairs VA loan, or D, conventional loan? The answer is A, U.S. Department of Agriculture USDA loan. USDA loans, available through the U.S. Department of Agriculture, support rural homeownership by providing affordable loan terms to low and moderate income households in eligible areas. What is a distinguishing feature of a conventional loan compared to government-backed loans like FHA and VA? Is it A, no government insurance or guarantee, B, lower credit score requirement, C, restricted to veterans only, or D, requires private mortgage insurance for all loans? The answer is A, no government insurance or guarantee. Conventional loans are distinguished by their lack of federal government insurance or guarantees. They are typically issued by private lenders and may require private mortgage insurance under certain conditions. Which loan type typically allows for the highest loan amount with no down payment required among eligible borrowers? Is it A, conventional loan, B, Veterans Affairs VA loan, C, Federal Housing Administration FHA loan, or D, U.S. Department of Agriculture USDA loan? The answer is B, Veterans Affairs VA loan. VA loans, guaranteed by the Department of Veterans Affairs, allow eligible veterans to purchase homes with no down payment under certain conditions, typically offering more favorable terms compared to other loan types.
Notice the code in the corner? When you're stumped by a question, enter it at birdsey.ai for immediate help. Enjoy complimentary study sessions and access to hundreds of additional questions to help you pass your exam with confidence.
Loan qualifications. What is the minimum credit score required by most lenders for a conventional mortgage in Ohio? Is it A, 580, B, 620, C, 700, or D, 750? The answer is B, 620. Conventional mortgages often require a minimum credit score of 620. Lenders set this threshold to balance risk and offer favorable loan terms. This requirement ensures applicants meet baseline creditworthiness. Which of the following best describes the debt-to-income ratio, DTI, that lenders typically seek for mortgage qualification in Ohio? Is it A, 25%, B, 36%, C, 45%, or D, 50%? The answer is B, 36%. A debt-to-income ratio, DTI, of 36% is commonly preferred by lenders when considering a borrower for a mortgage, as it indicates the borrower has a manageable level of debt compared to income. In Ohio, which document primarily outlines the terms and conditions between a lender and borrower during the mortgage application process? Is it A, property deed, B, loan estimate, C, purchase agreement, or D, amortization schedule? The answer is B, loan estimate. The loan estimate is vital as it outlines loan terms and conditions clearly, ensuring transparency and helping borrowers compare offers effectively in Ohio's real estate markets. Which factor is not directly assessed by lenders when qualifying applicants for a mortgage loan in Ohio? Is it A, credit score, B, employment stability, C, property maintenance costs, or D, down payment amount? The answer is C, property maintenance costs. While lenders focus on credit scores, income, and down payment amounts, property maintenance costs are not a direct factor in initial loan qualification assessments, despite being important post-purchase. What is one major purpose of private mortgage PMI required on certain Ohio home loans? Is it A, protect the homeowner against default, B, protect the lender from borrower default, C, lower the interest rate on the loan, or D, cover property taxes? The answer is B, protect the lender from borrower default. Private mortgage insurance, PMI, is designed to protect the lender from financial loss if the borrower defaults. It's typically required for loans with down payments below 20%, mitigating lender risk. Which of the following is typically required for loan qualification in Ohio to verify a borrower's income? Is it A, pay stubs, B, electoral identification, C, utility bills, or D, credit card statements? The answer is A, pay stub. Lenders in Ohio require pay stubs as part of the documentation process to confirm a borrower's income for loan qualification. This proof helps establish the borrower's capacity to repay the loan. For loan qualification in Ohio, which is a critical component in assessing a borrower's ability to repay the loan, is it A, loan amount, B, employment history, C, property value, or D, recent purchases? The answer is B, employment history. An applicant's employment history is a key factor in Ohio for evaluating the likelihood of continued income, which is critical in assessing their ability to make mortgage payments. The loan application process. What is the primary purpose of the loan application process in Ohio real estate finance? Is it A, to evaluate a borrower's creditworthiness, B, to estimate property value, C, to ensure loan compliance with fair housing laws, or D, to determine housing market trends? The answer is A, to evaluate a borrower's creditworthiness. The loan application process assesses a borrower's creditworthiness and ability to repay the loan. This involves reviewing credit history, income, and financial stability, which are key factors in loan approval decisions set by regulatory authorities like Ohio's Department of Commerce. Which document is crucial for verifying a borrower's income during the loan application process? Is it A, employment verification letter, B, property deed, C, title report, or D, inspection report? The answer is A, employment verification letter. Verification of a borrower's income is essential in the loan application process. Lenders often require documentation such as an employment verification letter to ensure the borrower has a stable income source, complying with policies from bodies like Ohio's Department of Commerce. During Ohio's real estate loan application, why is the borrower's debt-to-income ratio important? Is it A, it shows the total value of the borrower's assets, B, it determines the maximum loan amount available to the borrower, C, it is used to establish the property's market value, or D, it replaces the need for credit scoring? The answer is B, it determines the maximum loan amount available to the borrower. The debt-to-income ratio is crucial in evaluating a borrower's risk level and determining their loan eligibility. Lenders use this ratio to ensure borrowers do not exceed recommended debt levels, guided by financial standards set by Ohio's regulatory authorities. What role does a credit report play in the loan application process? Is it A, it provides data for property valuation, B, it ensures compliance with environmental regulations, C, it offers insights into the borrower's creditworthiness, or D, it helps negotiate loan interest rates with lenders? The answer is C, it offers insights into the borrower's creditworthiness. Credit reports are essential for evaluating a borrower's creditworthiness by providing a detailed history of past financial behavior and obligations. In Ohio, lenders use this information to assess financial reliability in line with industry practices overseen by state regulatory bodies. In Ohio, which component is not typically part of the loan application process? Is it A, environmental assessment, B, credit history review, C, employment verification, or D, debt analysis? The answer is A, environmental assessment. While environmental assessments can be vital for certain real estate transactions, they are not directly linked to the loan application process itself. The focus is primarily on credit history, employment, and debt analysis to assess the borrower's capability to repay. What is a primary consideration lenders assess during the Ohio loan application process? Is it A, the borrower's citizenship status, B, the borrower's creditworthiness, C, the market value of all real estate in Ohio, or D, the lender's current promotional interest rates? The answer is B, the borrower's creditworthiness. Lenders focus on creditworthiness as it determines a borrower's reliability in repaying the loan. They review credit scores, payment history, and other financial obligations outlined in Ohio real estate finance guidelines. Why is employment verification critical in the Ohio loan application process? Is it A, it checks the borrower's citizenship, B, it determines the borrower's income stability, C, it assesses the borrower's property holdings, or D, it evaluates the borrower's educational background? The answer is B, it determines the borrower's income stability. Employment verification ensures the borrower has a stable and reliable source of income, which is crucial for meeting repayment requirements in Ohio's loan application procedures. Underwriting for Ohio real estate. Which factor is crucial to consider in the underwriting process for a mortgage loan in Ohio? Is it A, credit score, B, property location, C, color of the house, or D, number of bedrooms? The answer is A, credit score. Credit score is a critical component in the underwriting process because it indicates the borrower's financial responsibility and ability to repay the loan. Ensuring creditworthiness minimizes lender risk. In Ohio, what is the significance of the debt-to-income D ratio in underwriting? Is it A, it determines property taxes, B, it evaluates the borrower's ability to repay the loan, C, it affects the loan's interest rate, or D, it estimates closing costs? The answer is B, it evaluates the borrower's ability to repay the loan. The debt-to-income ratio is pivotal in underwriting as it measures the borrower's gross monthly income against their debt obligations, including the new loan, to ensure they can comfortably manage payments. What role does the appraisal report play in Ohio real estate underwriting? Is it A, it determines market rent for the property, B, it assesses the property's market value, C, it provides a history of the property's owners, or D, it lists recent local sales? The answer is B, it assesses the property's market value. In underwriting, the appraisal report is vital since it verifies the property's market value, ensuring the loan does not exceed the property's worth and mitigates risk for the lender. During the underwriting process in Ohio, what is the significance of verifying employment? Is it A, to estimate the borrower's net worth, B, to confirm the borrower can reliably repay the loan, C, to determine the borrower's life insurance needs, or D, to assess the homeowner's insurance premium? The answer is B, to confirm the borrower can reliably repay the loan. Confirming employment is crucial in underwriting to verify income and ensure the borrower has a stable source of funds to meet monthly mortgage obligations, thereby reducing lender risk. What is the importance of title insurance in Ohio's underwriting process? Is it A, to guarantee loan approval, B, to protect against potential future legal claims to the property, C, to lower property tax liabilities, or D, to appraise the property's current value? The answer is B, to protect against potential future legal claims to the property. Title insurance is essential as it safeguards against losses from disputes over property ownership, providing protection from unnoticed defects or claims that could jeopardize the title's legitimacy. How does the loan-to-value (LTV) ratio affect the underwriting process in Ohio? Is it A, it dictates the property location eligibility, B, it influences loan approval and mortgage insurance requirement, C, it sets the loan's interest rate, or D, it determines the closing costs? The answer is B, it influences loan approval and mortgage insurance requirement. In Ohio, the LTV ratio is crucial as it helps lenders assess risk. A high LTV might require mortgage insurance or affect loan approval. Loan closing. What is the primary purpose of the settlement statement in an Ohio real estate closing? Is it A, to record the property's transfer of title, B, to outline the financial details between the buyer and the seller, C, to calculate the property's new value after improvements, or D, to ensure compliance with fair housing laws? The answer is B, to outline the financial details between the buyer and the seller. In Ohio, the settlement statement, often a HUD-1 or a closing disclosure, provides a detailed account of all financial aspects of the transaction, including fees, credits, and payments made by both parties. Which party is primarily responsible for conducting the final walkthrough prior to loan closing in Ohio? Is it A, the buyer, B, the seller, C, the real estate agent, or D, the lender? The answer is A, the buyer. The final walkthrough is conducted by the buyer to ensure the property's condition matches the agreed terms in the sales contract before the closing of the loan. In Ohio, which document is typically used to convey ownership at the time of closing? Is it A, deed, B, promissory note, C, lease agreement, or D, mortgage? The answer is A, deed. In Ohio, deeds such as warranty deeds or quitclaim deeds are used to legally transfer property ownership from seller to buyer at the closing. What role does the escrow agent play in an Ohio real estate closing? Is it A, acts as a mediator between disputing parties, B, handles funds and documents until closing conditions are met, C, conducts property appraisals, or D, advises on tax strategies for property investments? The answer is B, handles funds and documents until closing conditions are met. The escrow agent serves as a neutral third party who holds and distributes funds and documents as per the agreement until all terms of the sale are satisfied. Which of the following costs is typically borne by the seller during the closing process in Ohio? Is it A, inspection fee, B, appraisal fee, C, owner's title insurance policy, or D, loan origination fee? The answer is C, owner's title insurance policy. In Ohio real estate closings, the seller typically pays for the owner's title insurance policy, which protects the buyer in case of disputes over property ownership. During an Ohio real estate loan closing, what is the primary function of a deed? Is it A, proving ownership, B, securing a loan, C, determining property taxes, or D, listing property features? The answer is A, proving ownership. A deed is essential during closing as it legally transfers ownership of the property to the buyer, a standard process governed by Ohio law. Ohio mortgage disclosure requirements. Which document is required to be provided to borrowers by lenders for refinancing under Ohio's mortgage disclosure requirements? Is it A, closing disclosure, B, application disclosure, C, loan estimate, or D, servicing transfer statement? The answer is A, closing disclosure. The closing disclosure is mandated by Ohio law to be given to borrowers before closing on a refinance, ensuring they understand all the costs involved. What time frame must Ohio mortgage lenders adhere to when providing the closing disclosure before closing? Is it A, 24 hours, B, 72 hours, C, 7 days, or D, immediately? The answer is B, 72 hours. Ohio follows the regulation requiring the closing disclosure to be given to borrowers 3 business days before closing to allow adequate time for review. Which Ohio Act governs the transparency and disclosure requirements for mortgage lending? Is it A, Ohio Consumer Finance Act, B, Ohio Mortgage Loan Act, C, Ohio Real Estate Act, or D, Ohio Consumer Protection Act? The answer is B, Ohio Mortgage Loan Act. The Ohio Mortgage Loan Act sets forth detailed requirements for the provision of loan information and disclosures to protect borrowers during the mortgage process. Which of the following must be disclosed by Ohio mortgage lenders regarding loan terms? Is it A, annual percentage rate, B, monthly rent payment, C, real estate commission rates, or D, home inspector fee? The answer is A, annual percentage rate PR. The APR must be disclosed as part of the Ohio mortgage disclosure requirements to ensure borrowers understand the full cost of their loan obligations beyond interest rates. Under Ohio mortgage rules, Who is responsible for ensuring borrowers receive a timely closing disclosure? Is it A, the real estate agent, B, the title company, C, the mortgage lender, or D, the buyer? The answer is C, the mortgage lender. Per Ohio regulations, it is the lender's duty to ensure that borrowers receive the closing disclosure on time, allowing them to review all costs associated with their loan. What must be provided by mortgage brokers to consumers under Ohio law before loan origination? Is it A, estimated property tax bill, B, closing statement, C, loan estimate, or D, appraisal report? The answer is C, loan estimate. Ohio law requires mortgage brokers to provide loan estimates early in the mortgage process. This document helps borrowers understand the loan's key features and costs, promoting informed consumer decisions.
Thanks for joining us today. If you found this video helpful, subscribe to our channel for more practice exams, tips, and tricks. And don't forget to visit birdsey.ai for complimentary study sessions with Birdsey, your AI-powered study partner.